Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 16th of November. Starting off with the FTSE 100, where we find out that 50-day line has been the barrier here for 75.10, and we're in a range between, 7,300 and 75.10. Now we need an end-of-day close at least above that 50-day line to give us the move up towards the top of that falling February trend channel, 76.70, which could happen still by the end of this month, but the FTSE seems to be dithering rather frustratingly. Moving on to the DAX, where it's not quite as a dithering mode here. Here we've got the index breaking out of this falling trend channel from May and above the 200-day line, 15,600. Looking for 16,000 sometime by the end of this month, while we hold above that 200-day line, which is now rising quite nicely. And if you look closely, you can see that the 50-day line is starting to curl up as well. That suggests that we could actually be in the run-up to a golden cross buy signal sometime later this month or going into the beginning of December, but obviously it is early days yet. The Dow has also been on the front foot over the recent past. Here you can see that we've hit our 35,000 target and are now looking for up to 36,000 as soon as the end of next month, or maybe even sooner than that. I'd like to see the market stay above the top of the latest gap there, 34,600, while we attempt to get up to 36,000, and obviously new highs for the year, so all pretty solid there. Moving on to Bitcoin, where there's been a bit of a wobble over the last few days, but that seems to have ended. We're back testing the recent highs around 38,000, looking for an end-of-day close through 38,000 to give us the 43,000 we've been looking for by the end of this month. That's a resistance line projection from the middle of last year, actually this time last year, in fact, and we're hoping that that will be hit over the next couple of weeks, hoping for a decent spike, a bit like the one we saw back in October, maybe a gap to the upside on the news the market's been waiting for regarding ETFs. Onto the stocks, and starting with Celadon, which has given us a decent signal here, bear trap gap reversal, so bear trap from below the October support there, around 87 pence and gapped higher today, while we're above 87, looking for £1.20 plus by the end of this month, given that very positive charting setup. At this stage, only back below today's intraday low around 90 pence, really delaying the upside scenario. On to Conroy, where the company is proving that age is just a number. Here we've had a decent turnaround, got a rising 50-day moving average as well, and above recent neckline resistance around 14 pence. We're looking for up to 19 or 20 pence, basically retesting the April resistance by the end of next month, and hopefully rather sooner than that. It's a bear trap from below the July support, the February and July support, around 13 pence. Moving on to Cellular Goods, and here the company coming up with an announcement almost every day. Obviously, you're really keen to try and progress itself and also to get the shares back up again. We've got a resistance line there from May around 0.53. Above that, looking for as high as a penny by the end of the year. Obviously, they'll have to come up with some pretty decent news in the meantime to deliver that kind of upside, percentage upside from current levels. Moving on to Genflow, where there's been a falling wedge breakout. That's through the 1.65 pence level. Above that, looking for the top of that falling trend channel from June, as high as 2.75 pence. And we should see that by the end of next month, or hopefully rather sooner. The next situation is one which has been quite volatile in the recent past. Here we've got GSTechnologies, lots of naysayers with this company as well, but the technical view is at above 1.3 pence. We are feeling bullish. In fact, you'd probably say 1.2 pence, because that's actually where the floor of the latest flag is, and looking for a retest of the 2 pence area sometime by the end of this month. This looks like a mid-move consolidation here ahead of a new move to the upside, which actually could be quite decent. Maybe too early to sort of say where that'll be, but looks as though we could be up towards the 2.8 or 3 pence area if we can get a decent push through 2 pence. But the key here is holding above that 1.2, 1.3 pence support band. We're also about a day or so away from a golden cross there, with the 50 and 200 day moving averages both rising at the moment. Had a requested stock for Greatland Gold, and a good day to ask for it. We've had a mid-move consolidation here, likely mid-move consolidation between 9 and 10 pence, and the breakout on the close yesterday really followed through on that very well. And the first leg here was from 6 pence to 10 pence, so that's 4 pence. We now look for a measured move from 9 pence to 13 pence, and if you can see on the longer view, there's a resistance line projection, an upper parallel there from the summer of last year heading up to 15, so maybe we get to 15 by the end of this year by way of that 13 pence resistance area, which was the summer of 2022. Moving on to HeliumOne, where we're still waiting for the tsunami of hydrogen. In the meantime, shares look as though they're trying to get their act together. Unfilled gap to the upside yesterday. We've broken the high of yesterday, so that is a good signal there. And looking for now 8 pence, especially while we're above the 6 pence zone. And ideally, we stay above the 50-day line now at 5.66 pence at all times. The next situation is one which I haven't covered for quite a while. It's Longboat Energy, and here the picture is of basically an inverted head and shoulders. It's a bear trap from below the September support there at 18 pence. Above that, we're looking for the shares to at least fill the gap up to 23 pence sometime this month, and then maybe the big picture for the end of the year up to as high as 35 pence, although at this stage that seems a little bit ambitious. Ideally, we're above the right shoulder of the formation there at 17 pence at all times. Interesting setup at Mirriad, where we've got this rising trend channel base, and we've gapped up today, looking for a clearance of the 2.1 pence area to take us up to 3 pence, hopefully by the end of next month. A classic charting setup here at Pressure Technologies, with a gap down for last month and a gap higher this month, so that's a bear trap island reversal. While we're above the floor of the gap there at 25 pence, looking for the shares to retest August resistance and the 200-day moving average at 36 pence as soon as the end of next month, or even sooner. I've got bullish divergence line there as well in the RSI window, so there should be some momentum building after that bear trap that we had momentarily last week. On to Premier African, where there's also a bear trap in the air. We had the low there back in June. That was around the 0.23 pence level. The low this week down to that was the support area over the course of August to September, and hopefully that will come in again as a target for the stock. On the last two, first one is Skinbio Therapeutics, and here the picture is they've got a rising trend channel there. That's been there for well, basically since the spring, and above the recent support area at 20 pence. We're looking for the shares to make their way towards the top of the channel at 34 pence, hopefully by the end of next month. I wasn't expecting to cover the final stock today for quite a while, but Woodware looks like it's back. We've got a rising 50-day line. We've got a rising trend channel base from back in April. That's based at 0.52. Above that, looking for a penny by the end of next month. Obviously, fundraisers and other unforeseeable things notwithstanding. That's it from me today. More updates tomorrow.